Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow Chicagoland Retirement. And as always, here on the program, we have your resource, ladies and gentlemen, for that common sense approach to planning, helping to clarify the financial world. He is Tim Stearns, CFP, Certified Financial Planner, president and founder of TJ Stearns, Inc. And Tim, it seems like a lot of mud in the water to clarify right now. There's a lot going on in the financial world.
Well, I would agree with you. With all the tax bills being bandied about, that they're trying to figure out what they're going to do to pay for all the different bills that they've passed through. That so we need to pay for all this stuff. So these are the reasons that we have to talk about on our radio show today.
Well, and the reasons why proactive planning is a good thing. Now, we do need to be reactive when things change on us, but we do know about many of the changes ahead of time and can be proactive in our planning, and still plenty of time left in the year to do some of that proactive planning, ladies and gentlemen. If you've got questions or concerns on a financial investment or retirement planning nature, give Certified Financial Planner CFP Tim Stearns a call. He does make his time available to radio show listeners, to podcast viewers. No cost, no obligation. Typical planning fees could be $1,000 or more. Tim waives all fees and charges for any radio show listener to go through that planning process. All you need to do is call 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, bottom line, let's face it, whenever they propose changes in the tax code, it's generally not a great thing for the saver or investor.
I would agree. There's a lot of different things being talked about out there. One of the things being talked about is that they might do away with the backdoor Roth conversion, which, if you make over a certain amount, you can't do a Roth. But with the backdoor Roth conversion, you might not be able to do that at all. And what they're saying is that in 2022, that will probably be dead.
Well, Tim, to me, by saying that into the future we will make rules or laws against it, it does legitimize the strategy today and probably emphasize the importance and the value of it if we were to plan proactively. And I know that this particular law, it's got some runway time, so we might still be able to do it for a few more years.
Yes, I agree with you. But if they get their act together, it could go away real quickly. And, that's a lot of people have talked about doing the backdoor Roth conversion because they can't do the legitimate way. So this is kind of a loophole that they're trying to close. And I think you want to take a look at doing it. Now is the time.
Well, we have some time left in the year. And if you are looking to manage your taxes, not for this year or in previous years, like what we do when we actually file the taxes, but if you are looking to plan proactively to minimize your lifelong tax bill, and you'd like to quantify the value of certain strategies and understand what a Roth conversion this year may mean for you over time, pick up the phone, give Certified Financial Planner Tim Stearns a call, 800-640-2256, 800-640-2256. Now, Tim, it does bear to mention that as of right now, as of the conversation that we are having, this is still just a proposal, not
Yes.
law yet, but
Right.
it definitely tells you where their crosshairs are focused.
Right. And we've been talking about that in our retirement classes. We ask people, and to a man, everyone says the taxes are going to go up. And I think that's what's going on here, is that they're ready to capture more taxes, disallow Roth type accounts. One of the things in the bill that passed out of the House Ways and Means is that if you have an AGI over $400,000, they won't even allow you to put it in an IRA. let alone a Roth, which you can't do currently. So, I mean, they're coming after the middle class in my mind, and it's 450,000 if you're in a joint account.
One thing to note about that AGI is that is actually the line on the tax return above where you take deductions. So the small business owner that may be grossing a decent revenue before they pay rent, before they buy tools and equipment, before they pay payroll, may have a number that's significantly over that, disallowing them from taking advantage of these strategies. However, their net income after they deduct all of the expenses that it takes to actually run and operate their business, they may fall far below that number, yet still be disallowed.
In speaking of different laws, they are talking about, the Secure Act 2.0, which I'm shocked when people come to our classes that they don't know what that is. Secure Act 2.0 made, instead of 70.5, then it was 72. And it did away that you had to take your required minimum distributions. And then you had to, the stretch IRA went away. And if, God forbid, your parents both died, within 10 years, you have to drain their IRA accounts, right? So they're talking about now at age 75, that you'd have to take your required minimum distribution. And that passed out of the House Ways and Means Committee unanimously. So I think that's something we're going to see. The only highlight I saw on there that I liked was that they're going to go from you able to put a $6,500 catch up to $10,000 catch up.
Well, where they give us something on one hand, they usually take it away on the other. And Tim, I know that they gave us an extra year and a half with the Secure Act 1.0. The original Secure Act moved those RMDs, required minimum distributions, back from 70.5 to 72. But then on the other hand, they did away with generational tax deferral when they put a moratorium on the stretch IRA and said that all inherited IRAs that passed after January 1st, 2020 must be liquidated by the beneficiary within 10 years. Essentially, Tim, that's going to push a whole lot of recipients of IRAs probably into a much higher tax bracket as well, which ultimately is a tax dollar harvesting for the IRS.
Right. Well, because they have to pay for all the money that we're spending. And, we've talked about this. If you have a $10 bill in your wallet, 2 of those dollars were printed in the last 4 to 5 months. So that's why we have this thing called inflation coming back and rearing its ugly head. In our classes, we call it the silent thief. And the example I always give, is that we have the 1976 Sears catalog, and you could install 4 tires for $200. And I just had to buy tires for my son's car, and they were $800. So if you want to understand exactly what inflation will do, that's a great example. So we can't rely on the government to take care of us. I think it's on us. What I want to do is segue into some 10 things that people do to be successful in retirement that we've kind of talked about.
Yeah, let's absolutely cover those, Tim. We all want to be successful in our investment careers and leading up to retirement. And then certainly once we leave that paycheck behind, that is the time where we are potentially most vulnerable and really have to have a great plan, some of these fundamentals for continued financial and retirement success. And those are the types of plans, ladies and gentlemen, that Tim Stearns helps to put together for his clients in and across Chicagoland. And for listeners to the program, you can benefit from that planning process as well with a certified financial planner. All you need to do, pick up the phone now, give a call to TJ Stearns Inc., Tim Stearns, your CFP, certified financial planner. Again, it's a complimentary, no cost, no obligation process in the planning and looking at how you can be proactive with your money, how you can have a strategic plan to help you achieve and accomplish your goals. 800-640-2256. That's 800-640-2256. So, Tim, let's break it down. What are some of these habits, routines, behaviors of successful, savvy investors?
Well, I'll start with, they understand that their income is the biggest wealth builder for them, right? They have a plan for every dollar that they're earning. A lot of people are living paycheck to paycheck. That's not what I'm talking about. I'm talking about knowing exactly what you want to do, where you're going to spend your money, investments, getting proactive with taxes, and knowing, that you have to fund your 401k and that type of thing too. So that's one of them. One other one is I would say that they need to make a monthly budget and they stick to it. You know, they don't go and spend on frivolously. I see people do that all the time. They spend $1 that they don't have. And that's just not the way to build your wealth or to have success in life.
Now, some people may shy away from budgeting because they feel like it's limiting. However,
Sure.
Tim, if we spend frivolously, like you mentioned, it's not a self-imposed restriction at that point in time. At a certain point in time down the road, if we outspend because we aren't sticking to a budget, then we will be budgeted by the circumstances. We
Right.
don't want to risk running out or running low on funds and having to adjust lifestyle down the road. So it's a much easier process, even if it's something that does not feel warm and fuzzy, to look at how to control spending or at least keep it at a reasonable level now.
Right. We are what we become, you know, and if you're living that life where we're not the federal government. We can't run at a deficit forever and ever. Okay. And then just increase taxes.
Yeah, don't worry. We'll just increase our spending limit.
Right. Exactly. Which is not a fix, right? I mean, it's a Band-Aid on a gaping wound. So what I always tell people is make sure that you understand what your budget is and stick to it. The next thing is that, these successful people, they invest 15% of their money into their 401k. Now, what we advocate for is at least do up to the match. I mean, that's free money that you're receiving. My other thing that we always talk to clients and students about is that you should be, if there is a 401k Roth ability to do that, you should do it. That's an option. That get all over that, because with the way Medicare is looking, they're taxing us more and more. And a normal person pays maybe $100 a month. If you've got savings, a house, and you've done well for yourself, you're going to be paying a heck of a lot more than that person who only saved about, on average, Americans have about $20,000 for retirement, and they're living Social Security check to Social Security check. Scary.
Now, that's not your typical client there at
No,
TJ
my
Stearns.
gosh.
You deal with those who have been serious, who are aware that the future can be expensive and it can be long, and therefore are doing much more to try to save, to give themselves a good chance. And some have done exceptionally well in giving themselves a high likelihood of financial success into and throughout retirement. But still, if we're setting financial goals for saving now, kind of a minimum goal would be saving 15% toward retirement, capturing the match if it's available. And if we do have the option inside that 401k, the Roth, because Tim, we've talked about the direction that you and I and most everyone we talk to believes taxes could be going in the future. So why not pay them now before they go up? And prepaying your taxes on your retirement nest egg, Tim, is kind of the equivalent of having saved more.
Right. Well, you want to pay on the seed or the crop is what I always talk about. So that's one thing. So that being said, the next bullet point would say they have a long-term vision for their investing. How are they going to look? We have a lot of people who are coming in here, and the stock market's gone on a holy terror for 12 and a half years. In the market, normally, we talked about this, pulls back every 7 years. Well, what we've seen is that the stocks have gobbled up what used to be bonds. And if you're doing asset allocation, that's not what you signed up for. The nice part is that if you're in a 401k, you can have those target date funds that will adjust on the fly so that you're staying true to what you wanted. That being said, you're beholden to those funds. The 59.5 is what I advocate for all of my clients, that they should be able to opt out some of their money in their 401k so that they can take control of it and put it into better investments and open up your life to better options.
Well, again, if you would like help, assistance from a certified financial planner, CFP, Tim Stearns is here for Chicagoland, your resource for sound guidance to how to plan proactively to achieve your goals into and throughout your financial future. Pick up the phone and give a call, 800-640-2256, 800-640-2256. That's 800-640-2256. You can also go online, tjstearns.com, tjstearns.com. Most people who have that long-term vision, Tim, and are able to save aggressively or even to that minimum level kind of benchmark that we set, that 15%, they are able to live below their means now. Right. And that's potentially one of our best assets into and throughout retirement.
Right. I would agree with that. Don't spend money you don't have. And I see that all the time. I'm going to make more money so that I can spend this, but I'll spend it right now, today. And that's just not the way to do it. That's not it doesn't mean it's going to have success, right? That being said, another thing that people who are successful in life don't do is they don't borrow from their 401ks. I love the argument, well, I'm paying myself back. Well, while you're quote unquote paying yourself back, and usually it's a 5-year loan, while you're doing that, you're missing out on opportunity in your investments because they're not in the market. And B, if God forbid you get termed or you quit, it all becomes income right away. So not a thing you should be doing. The next one would be
taxable, and if you're younger than 59 and a half, potentially additional penalties.
Absolutely.
Yep.
So the next one I would say is they don't fall for get rich quick schemes. They're known as crypto right now. I mean, it's been different things in the past, but crypto, it's kind of unregulated. No one really knows what to do with it. People are making millions off of it. It's a pretty scary world. I don't ever put any of my clients in that just because I don't believe in it. I'm kind of like Warren Buffett. If you can't explain to me, how it works, I don't want to buy it. So they don't fall for get rich quick schemes. I would be very leery and careful going into those investments.
Now, looking at what we're doing to the dollar, the fact that 20% of all of the money in circulation has been printed in the last 18 months, according to the Federal Reserve Economic Data Charts, the FRED, and just what we're seeing with uncertainty surrounding the dollar, is there a place for alternative or uncorrelated assets, Tim, something that isn't necessarily tied to the dollar or works against that devaluation?
Well, just a couple things. I mean, you could do commodities, usually that works adversely. It's uncorrelated. Annuities, that's definitely a way to do it. I'm talking about fixed indexed annuities, not variable, because those will go up and down as the market does. Cash, although cash right now isn't earning much. Another one that a lot of people don't know about is the multi-year guaranteed annuity, a MIGA, and those are 3 to 5 years, and they're paying better than most CDs. So those are great opportunities, and they're uncorrelated. When I first got in the market in 1994 as a stockbroker, when the stock market went up with equities, the bonds went down. Well, nowadays we see both sides go down, like in 2008. So we need to be careful with that. So, that's one of the things I would watch out for is make sure that you have something like that.
Well, again, if you would like some help, assistance, guidance, give a call to Certified Financial Planner Tim Stearns. He's here as your resource, ladies and gentlemen, for a common sense approach to planning, for specific guidance for your situation, and to review and evaluate current investment in your portfolio. If you've got an IRA or a 401k or just a brokerage account out there, or excess cash or capital that's sitting in a bank doing nothing, Tim can help you evaluate and understand what role those dollars are playing versus what they should be playing to help you achieve your goals, and then has access to all the tools across the spectrum of the financial world to make sure that you are on track to achieving those goals, helping you understand the risks that you're taking, the fees that you're paying, the taxes that you may be liable for. That's all part of that review process, how to maximize pensions or Social Security, how you can leverage dollars to offset potential costs of care into the future, how to create the legacy and the impact that you would like to for your loved ones and family. Give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Speaking of legacy, Tim, we put those documents together. We may buy life insurance in our 20s or 30s, and then we check that box and say that we've got that squared away and taken care of. However, every once in a while, it's probably worth it, and savvy savers and investors do review those things from time to time.
Yeah, when we do income allocation plans for people, I just met with a couple the other day. He's had 4 bosses. We did an income allocation plan for him. And since he came with us, he's had 4 bosses in the last year, and he's ready to hang it up. So he wants to look at, what does it look like if I go earlier, which is great about our plans is that they're dynamic. They're not static because life isn't static. We can make the adjustments to see how that's going to look. So I think that that's a feather in our cap, because we need to move and shake with our clients, because life is always changing.
Well, Tim, a couple more that a savvy saver or investor would do is actually work together in a team, and a couple
Yes.
different teams here. If we're married, pretty important for both spouses to at least be aware of what's going on. I know that that has not always been the case. There used to be kind of one person between the married couple who handled the
Sure.
finances, air quotes for those just listening on the radio. But really, if they passed away first, they're doing their spouses no real favors there.
Right. I always, I always tell people, if you're married, bring your spouse in, just so that we're all on the same page. And I think the spouse might say, I don't care, he or she handles that. But at the end of the day, after we meet, they feel better because they kind of know where everything is and how we have it situated, and the things that we've done, like stop losses, uncorrelated assets, stuff like that, that they didn't have previously of meeting us. And the last thing I would tell people, and this is self-serving a little bit, but I would meet with a financial professional. Make sure he or she is a certified financial planner. Make sure that they have accreditations, like being a fiduciary, that type of thing. And I'd tell anybody out there, if you want to come see us at our retirement classes, we're at Roosevelt University in Schaumburg. It's easy to get to. And we don't sell any products. All we do is educate. And I think a lot of people have left that class very happy and satisfied.
Opportunity for you to learn more about your money, your finances, and about the financial and economic world around us, about current market conditions and the tax environment, and what you need to be doing, paying attention to, and addressing in your planning in order to have a more stable and confident financial future. And Tim Stearns is here as that resource to help guide you along, to teach and educate in those retirement classes. And if you would like to attend that, or if you would like that one-on-one individual review and strategy session, pick up the phone and give a call, 800-640-2256. That's 800-640-2256. Now, Tim, a couple that may not necessarily make the top 10 of the list, but fundamental foundations for long-term investment success: dollar cost averaging and regular rebalancing. And sometimes things get easily overlooked, but really cannot be underemphasized in their importance.
Well, the good news is when you're in a 401k and you're doing the match, you're always dollar cost averaging. When the market's up, you're buying less shares. When the market's down, you're buying more shares. That's pretty self-evident. The rebalancing right now, I couldn't say more about that. I had an uncle that worked since he was 18 years old, and he got forced to retire at age 70. When I looked at his portfolio, no one had ever helped him. He was never married. He had no children. When I looked at his portfolio at age 70, he was 80% all in low price stock fund, which is insane, and luckily it had worked out for him, but he could have lost his whole retirement egg. And my point is, he never rebalanced. They didn't have target dates then. So if they do have that at your work, that's a great opportunity. But if you're over 59 and a half, make sure you give us a call and we can help you reallocate those funds into a bigger, better option.
Well, again, if you would like help and assistance, pick up the phone, give Tim Stearns a call. Chicagoland's certified financial planner. Now, strategy sessions with a CFP can easily go upwards of $1,000 to several thousands of dollars, but Tim Stearns, for radio show listeners, waives all fees and charges. This is a time for you to get serious about your planning. And as we round home here and head toward the end of the year, many deadlines that actually need to get met. If you need to take an RMD, if you would like to make that Roth conversion, if you're contributing to employer-sponsored plans, if you'd like to make a charitable gift or donation and have a deduction, or you'd like to make a personal gift to a friend or a relative, a child, a grandchild, all of those have year-end planning deadlines. So let's make sure that we understand those. Many of those can be significantly advantageous, but you've got to plan proactively. You've got to be aware of those deadlines and execute well before them, because that's the day it needs to finish processing, not the day that you need to start. So let's start now, ladies and gentlemen. Pick up the phone, give Tim Stearns a call, 800-640-2256. That's 800-640-2256. And Tim, finally, you always make some great resources available as a little added incentive to get educated and take action. What do you have for us this week?
Well, I still love the book, Income Allocation. First 10 callers that have over $500,000 in assets, give us a call. We'll get the book into your hands. And we have a digital version even, but we can also get you the book into your hands via the mail, or you can come see us, and we're happy to do it. That is one of the opportunities I like to do. The other one is, I would tell you, a written income plan is great. I mean, it's intense, but it makes everyone feel better about their retirement, because you should work in the know when you're retiring.
Get that written income plan, the document that outlines the specifics of your situation and how to create income into your financial future. And then if you would like the understanding of all the risks that we are facing and how to address them by properly structuring that income plan, that's what the book Income Allocation is really all about. The Essential Retirement Planning Strategy Guidebook, being used as a reference and a resource by advisors across the country and retirement-minded individuals to understand the risks of today's retirement and how to structure the assets to address them. Income Allocation or the Written Retirement Income Plan can be yours just by calling now. Give a call, 800-640-2256. That's 800-640-2256 to speak with certified financial planner Tim Stearns and the team there at TJ Stearns Inc. Tim, we always appreciate the guidance that you provide. Thank you for being here as the resource for so many Chicagoland area savers and investors, taking our planning and our financial future seriously, but still worried about what lies ahead.
My pleasure, Peter. Thank you.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.